Hello and welcome to Inderes TV. Today I'm in the studio with Analyst Petri Gostowski to discuss Neste. Hi Petri.
Hi there.
So Neste's Q4 report was a bit twofolded. The result exceeded expectations by a good margin, but then the guidance for renewable product sales volumes for 26 was a bit of a disappointment. What's your view on all of this?
Well, obviously, Q4 market environment was favorable in both business units, although Neste's renewables volumes were to some extent limited due to maintenance work. They were able to gain some benefits from the better market margin environment. And then this was obviously visible in the oil products also, where the product margins were very, very lucrative. So all in all, a good Q4. Then on the other hand, volumes are not expected to grow in renewables, and that is the main value driver of the company. So clear disappointment, and then behind this is all the maintenance work that is also expected this year.
Okay, yeah, so mainly the maintenance work is behind that guidance.
Yeah.
Well, staying on the guidance for this year was that sales volumes, as we said, are expected to be at the same level as in 25. And in oil products, they're going to decrease.
Yes.
So what about further ahead? What after 26? Can we say anything about that yet?
Yeah, well, if we look at the overall big picture, we know that the market for renewables is growing, so the outlook is good in that sense. And the big theme is going to be in 2027 when Neste's Rotterdam extension will be finalized, and then there's a means of getting really solid volume growth. So therefore, I mean, the outlook is good in terms of growth in renewables.
Well, you just touched on Rotterdam, and we have a question here about it, so I'm going to jump into that. But when do you expect production then to start? The 27 or?
Yeah, so Neste has said that mid 27. Well, we've learned from the Singapore extension that delays may happen, and it's huge factory or a production line, refinery. So, it's not very easy to provide a detailed plan. So currently the plan is mid 27, but it obviously takes months, few quarters for the production to be up and running at full scale. And then there's how you succeed in the go-to-market and stuff. Now the market demand looks good. So in terms of acquiring new customers and new sales, it should be fairly straightforward, but then it always comes down to the production and how it ramps up when you start increasing production. I think it would be we can expect that if it starts mid 27 like as is planned, still 28 you don't get the full production at full operating efficiency, so even more towards the end of the decade. But 28, 29 will probably see the best of the extension.
The sales margins in Q4 were higher than expected, and there seems to be a lot of drivers for the margins in renewable products. But what are these drivers?
Well, the biggest factor is obviously the demand growth that has picked up. If we look back, we've come from an environment where demand was not sufficient compared to supply, so that pushed margins down. Now we've seen the good growth outlook in the road transportation renewable diesel market, and that has really driven up the margins in Europe. Obviously, a big factor that is shielding Europe from the global oversupply are tariffs that have been put in place. So kind of you have an environment where European demand is growing, and then it's kind of shielded from certain areas oversupply. So it's a good market position.
And we I assume we can expect this to continue at least for a few years to come with the political climate as it is.
Yeah, I'm hesitant to say anything too far away ahead because we've seen, changes happen quickly. And then on the other point, if we don't forget the oil products business, their one big driver is obviously the sanctions on Russian volumes that has kind of basically cut down the refining or the supply of oil products in Europe, and then this has also or the market is very tight, so there's more demand than supply, and that's pushed oil products margins high.
Yeah, so depending on what happens in on that front as well.
Yeah, for sure.
There's an ongoing performance improvement program in Neste. What results have been reached so far in that?
Well, I think you can highlight the over 350 million in savings that the company has reached. I mean, there's for sure a big number of projects and many things that have been done, but yeah, and it's cost cutting. So clearly leaning the organization and therefore lower cost level.
Okay, and then finally the final question you always ask: what about the valuation and recommendation?
Yeah, the valuation is rather twofold. I mean, if we look at the earnings now, the valuation is rather high compared to that level. But then on the other hand, there's the earnings growth that we discussed on renewables, and looking into the end of this decade multiples. So like in 2-3 years, it's not that bad. So it's kind of balancing with the short term and the longer term view, and what we are hesitant and taking or leaning towards the longer term is because we've seen the big volatility in the market and what can happen on the margins front. So it's not that lucrative to lean towards that earnings potential. We know that there is it's a big operation to ramp up the renewables business volumes once the extension is done. So there's a lot needs to happen. What needs to happen in order to that earnings potential to actually come down in their numbers. So we are on the sort of cautious side with the reduced recommendation.
Okay, thank you.
Thank you.
Neste, reduced recommendation due to a tight valuation. You can read more at inderes.se, and you can ask questions from Petri regarding the company and our discussion forum.